Hello, everyone, and welcome to the Buck Stops here. I'm Catherine Murray. Well, we have seen a number of retailers report their most recent results, and I wanted to delve into the companies and also really what the read through is for the broader economy. As we know, the consumer accounts for about 70% of the GDP, and how they're feeling, how we're feeling, is very important as it relates to the economic outlook, what the US Federal Reserve may or may not do, what the Bank of Canada may or may not do as well. In other words, how is inflation impacting everybody? And therefore, where will we see rates go? That, of course, impacts the valuation of all asset classes. So that's kind of the big picture purpose here. But we're also going to, of course, get into some of the specific stocks and ideas for you in case there's a couple that you might want to look at. For that, Brian Madden is joining us. He's the CIO at First Avenue Investment Counsel. Brian, welcome and thank you so much for being with us.
Thanks very much for having me, Catherine.
So it was a bit of a long-winded way of saying why I want to look at the consumer stocks, and by way of background, you spent a lot of your career as an analyst covering those names, and I did way back when as well. But they really do tell you a lot about the consumer. So just big picture here, Brian. What do you think the read-through actually is from the results we've seen so far?
It's hit and miss, Catherine. There's companies beating subdued expectations. There's companies disappointing, and then some companies are still managing to power through and beat, admittedly sometimes lofty expectations. But I think the real bomb went off in the consumer land sometime in May when we saw Walmart a quarter ago with a pretty ugly quarter, one of the worst we've seen in decades. Target was not much better, and Amazon wasn't very good, reporting Q1 results. And so, I think that sort of reset expectations for a lot of the retail and consumer landscape. And so it's been sort of a mixed bag as we've gone through the Q2 reporting season. But yeah, broadly tying it back to the macro themes, Catherine, what we're expecting and what we're indeed seeing is a slowing economic climate. Some of these things are starting to bite consumers in the pocketbook, notably high energy costs and generally high inflation, food inflation. Rising interest rates are starting to cause pain on borrowers resetting mortgages, and so what we're positioning for here at First Avenue, and have been doing work on the investment team, is what we think of thematically as a consumer trade down. And so we're looking to the extent we own consumer names, consumer staples names, we favor over discretionary. And within the discretionary space, we favor sort of value-centric retailers and retailers with exposure to the trade down theme, tighter purse strings than what we saw a year ago when everybody was buying a jet ski and a hot tub and a flat
Mhm.
screen TV, and, everything else.
Yeah. Yeah, that's very true. So the trade down theme is always interesting when you go into an economic slowdown. And the dollar stores tend to be the ones that benefit the most. I guess, though, in some ways, you would think that Walmart would have been a little bit better positioned.
Well, yeah, Walmart, I think in Canada we tend to think of it as a general merchant, and it is, although there's grocery in a lot of their locations here in Canada. But in the US, it's very much a grocer. Grocery accounts for about half of their revenues in the United States. So, I think grocery is doing fine in sort of dollar terms, maybe in unit volume or tonnage terms. They might be losing a little bit of market share, but probably not too much. But where Walmart really stubbed their toe in the first quarter was on apparel and some of this more discretionary merchandise where they had to mark it down and kind of blow it out. I think their second quarter results came in stronger than expected, in part because they had reset expectations with that Q1 tape bomb that took the stock down a lot on the day they announced the results. But the other factor that's helping them is with half of that merchandise being groceries, grocery has been a category that's very inflationary. And so that's been
Right.
passed through and fed into better than expected revenues for Walmart, at least in that part of the store.
Okay. So it really is an atmosphere right now that goes back to how we all invested originally, which is some retailers do well and some don't, as opposed to, the U.S. Federal Reserve, really allowing so many assets to increase. We'll be right back. We'll take a short break.